Moneyweb now. On the money.
This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. Chatting now with Duma Mxenge. He is Head of Business Market Development at Satrix. Duma, always appreciate the early morning time. An enjoyable read you had out recently talking around avoiding in a sense, it's avoiding the FOMO trade and actually understanding what is in the ETFs that you are buying. Sort of doing the homework and kicking the tires in a sense.
Morning, Simon. Yes, we also thought it was quite an interesting article that we put out, and I think it was also kind of sparked by the idea of the famous braai, so where you're there and people are basically sharing their investment ideas and then you go away without actually even thinking, you just invest, blindly. So we were basically just saying, want to actually hit some bit of caution around that.
And it is. And I mean, I think it's understanding what's there. And I think a great example. I mean, towards the end of last year, lots of talk around emerging markets. They did really well for much of this year. But of course, it really wasn't around emerging markets. It was around South Korea. It wasn't even around South Korea. It was basically two memory stocks. I mean, SK Hynix and Samsung. And it goes back to understanding what's in that ETF and what you're really getting. And I suppose what you're really trying to achieve.
That is correct. And then we basically are saying that, when you are doing your homework, you need to think about the bigger picture. And there are two parts to it. One is to understand or identify the exposure. You've just made a great example around the emerging market ETF in terms of what's driving the returns. It's understanding the underlying markets or understanding the index or understanding the asset class if you're looking at maybe a more diversified, type of strategy. So that's one part. The other part is, what's the purpose of you actually being invested in this particular ETF? Is it for growth purposes? Is it for income return? Or is it for diversification within a broader portfolio? So that's what we are saying you must actually think about when you're actually thinking about being invested.
It comes back to, I suppose, that is in essence the old school way of doing it. And it is a case of, careful of chasing winners. You talked around that, standing around the braai. You talk around the sort of FOMO trade. It's avoiding that chasing of the winners and getting balance right. And the first part's perhaps easier. The balance is perhaps the harder part in many cases.
It is. No, it is. I do agree, as you know, and I think Warren Buffett also famously say this, is that, the only thing that you can get right in investment that you have control over is diversification. So, and we are saying that even within diversification, you must actually also look at what you invested in. For example, if you invest in an ETF that's heavily weighted around, let's say, tech stock, essentially what you're not well diversified. You actually have great exposure in one particular sector. So you need to think about sector exposure. You need to think about country exposure. You also need to think about market exposure. So those are the things, we really are encouraging people to think about.
And that's a great point. I mean, I actually was doing over the weekend, I was doing some digging. We look, the S&P 500, you mentioned tech. Yeah. I mean, that's almost 38% tech and what, 41% into the top 10. You go to just what, the MSCI, the All-World Country Index, suddenly your tech's at 30, your top 10 is at 24. We're getting technical here, but it is a sense of that wider spread.
It is. And that also brings opportunities elsewhere. From investors that we have spoken to, even as early as last year, is that there was concern around the massive exposure or great exposure into the US. And the conversation we've been had to say, where else, can you find, value in terms of being invested? Europe is one, Japan is another area. I know right now, EM is running. But that's the kind of thing you need to think about. It's not necessarily to say, where are you going to get your growth? It's more thinking along the lines of how to be well exposed in terms of your exposure, in terms of your overall portfolio.
But I like your thinking there. What you're essentially saying, EM's running. So what you're sort of running away from EM and saying, well, if EMs are running, where isn't it running? Because I'm going to get slightly better value there in terms of potential over the, if we're investing for 5, 10, 20 years, the EM running today, that might not be a story in the longer term.
No, absolutely. But I just want to make it clear. If you are invested in EM right now, we're not saying sell your EM exposure and go
Sure.
elsewhere. We're just saying that for your new money, perhaps start digging and looking at other opportunities elsewhere.
Yeah, but look, to be clear, I'm holding that EM ETF and I'm happy with it. But I like your logic there. It's a case of perhaps it's a great way to sort of manage exposure, is that what's currently sitting in your portfolio, as long as it's well constructed and put together, you can kind of let that do what it is. It's the allocation of new cash where we can be clever.
Absolutely, and it's about valuation, right?
Yeah.
So right now we are saying don't actually go for an exposure or an ETF that's actually doing well.
Mm-hmm.
You should actually be looking where ETFs that gives you exposure where the valuation is actually quite attractive. That's what we're actually trying to drive home.
Yeah. Fund the value, don't fund the hype. I suppose that is it. We'll leave it there. Duma Mxenge, he is Head of Business and Market Development, Satrix. Always appreciate the early morning time. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions.